Hello, everyone. My name is Lucian. Most of you know me from Twitter as Triangle Investor. In today's edition of CEO and Market Expert Interviews, I'm joined by Mr. Marc Henderson. Marc is the CEO of Laramide Resources, a uranium development company with assets in Australia and the United States. Marc, it is great to have you here. Welcome.
Yeah, great pleasure to be on with you, Lucian. Thanks very much for the invite.
Thank you for coming. Marc, you're in London as we speak. You will attend World Nuclear Symposium that is taking place there, but we will touch a little bit later on the conference. I want to start with the question that I ask all my new guests, and that is the introduction. So tell us, who is Marc Henderson? How did you get involved in uranium? How did you become Laramide CEO?
So I got involved, and I've been involved in, mining development, mostly resource development of different projects, different commodities for, at least a couple of decades now. My family was kind of in it before I was. Mm-hmm. We got interested in uranium really in the late 90s when I had a partner who had been involved in it in the 1970s. Mm-hmm. And which I didn't know anything about. I literally knew nothing about uranium then. And we actually started a little company believe it or not, in the late 90s to take advantage of what was then a little uptick in the interest in the space. That was kind of the mini bull market before the real bull market in 03, 07. And so we learned a lot about that. And really it was all about, in the 70s, was all about, similar to now, we had a big energy crisis. Yeah. I think the Western world figured out that nuclear power was a good solution to resolving some of the energy crisis that happened. You had two oil price shocks in the 70s. And by the end of the 70s, this colleague of mine who was a geologist, he said every geologist in America was working in the uranium business. And to some extent that was true. All the oil companies were in it, which you can see if you see where some of these legacy assets came from. They have the stamp of those kind of companies from that era. So I kind of got a background in what it meant. And the reason that we had such a big bull market is, the Americans went from building no nuclear plants to 100 nuclear plants in a decade. And so when this happened again, the stirrings of this happened again in the early 2000s when China basically came out and said, we're going nuclear because we need to, for air quality and because we got a voracious power demand. You could see kind of a repeat developing. And that's really kind of what happened. That last cycle you can really attribute mostly to China. And they effectively said, we're going nuclear, and they said we're going to build 60 gig by 2020, and by and large they pretty much did what they said they're going to do. So when they say now, that they're going to go to, I think it's 200 gig by 2035, yeah. And they put out a stretch target, I believe, of 400 gig out to 2060. So there's a big, huge amount of structured demand out there that is kind of underpinning everything. And so that's kind of how I got interested in it. And really no one knew anything about it. And no one had done anything in uranium in 20 years. So that was kind of the beginning of it. And so because of that experience we had, I would really say it was kind of a false start in the 90s. Yeah. Although we acquired some interesting assets. And some of the companies from that era, by the way, are still around, and the history goes back to then with some of these companies that are still around and some of the projects that are still around now. So when it came around again, we were kind of ready to go, and then we were fortunate. And when we saw this opportunity in Australia, we literally jumped on it, and within a week we tied it up. And that's kind of the genesis of how we got going. And that was the Westmoreland project in Australia, the previous owner of which had been Rio Tinto.
Excellent. Let's get back to London Symposium for a minute. Last week, I was in contact with few uranium company CEOs, and they all told me they are going there. I guess one of the hot topics over there will be Cameco. They provided production and market update on Sunday, where we saw 2.7 million production setback. My question is, do you see Cameco coming to spot market aggressively and trying to buy material in order to fill delivery contracts? And what do you think this will do for a spot price?
Well, everybody, as you know, investors look at these kind of things and they kind of want instant gratification when they see news like that. But to some extent, it's interesting. Cameco really, I suppose, had no choice but to make this kind of production guidance shortfall, because they're about to go to this conference where they're going to meet all of their customers
Yeah.
And obviously they're already in direct competition with their customers because they basically telegraphed that they need to be in the spot market. They now clearly need to be in the spot market more aggressively. So normally you wouldn't be wanting to quote, game your customers, so to speak. So, I think it's in the interest of full transparency, they had to do what they did. Those kind of hiccups were particularly unfortunate at this time because we've had some other, production shortfalls and recent things, as you know, or projects that are going to be a bit delayed and this kind of thing.
You mean
So
Niger?
the pressure, yeah, we've got Niger, you've got a timeline setback with Peninsula, which is a project. There's only a handful of projects that are really in the pipeline with target startup dates, with target production profiles. So the risk in the uranium business is all on the supply side. So this is it's small, but it's a big, meaningful thing to add more pressure to that market. Also, the spillover from that is, France is involved in these Cameco projects in Saskatchewan. And so they're already short pounds that they're owed from previous problems. And so the market, the supply side is pretty tight now. And the spot market, I don't know how tight the spot market is. You'd have to ask. You have great guests on, ask the Sprott folks. I'm sure they're not going to give you a price target or anything else, but I would imagine the spot market's pretty tight. And that spot vehicle has not been turned on for, I don't know, 6 months. If that starts turning on as well, then I don't know, what kind of price level we're going to get to, but directionally, I think, it's only going higher from here.
Definitely. Mark, let's discuss projects that you have in your portfolio. We will start with your US projects. But before we do that, I want to ask you a question about pounds in the ground. Besides 117 million pounds uranium resource you already have on your projects, do you believe you could expand that resource numbers, and to what extent?
I believe there's pretty good. It's not really brownfield because we haven't built the mine yet, but that's a legacy asset that has a lot of pounds in Australia. In fact, we're drilling there now. That's an asset where I think there's very good scope for adding more pounds. Typically, we've got a project that, with there's a couple of PEAs on it. What we're going to build there is really well defined. The costs need to be refreshed and that kind of thing. But essentially, you've got a mine life that's 12 or 13 years already. With that kind of mine, you typically don't drill out 25 years of reserve. So do I think there's scope for there to be more? Yeah, I do in that particular place. We also own a very nice raw prospect to the west of that. That's essentially the rest of the belt that we bought from Rio Tinto, a long time ago, but now we're finally getting to work on it post Fukushima. Yeah, that's got a lot of potential actually for uranium and for some other commodities, including things like tin and REEs and things like that are interesting to the market. So any whiff of success there will be kind of an interesting little thing on the side. Gold as well. I think there's scope there. I think in the United States, it's pretty well drilled out. There's some projects that are not in play right now effectively because whether it's tribal ownership or something else. But by and large, as I said before, we started from the top of this thing telling you what went on in the United States in the 1970s, which is, these oil companies went in there. And if you saw the amount of money they spent in the 1970s trying to find uranium to fuel these 100 power plants that they built, it's astonishing. And so I think that's pretty well explored, certainly for things like, the ISR type projects that tend to be closer to surface. There's some scope for some potential, particularly in New Mexico. I think there's scope for potential for underground projects that aren't fully drilled out, that are deeper. There's some bigger projects there that may see the light of day if the Americans get super concerned about security of supply and they really put an effort on to get some of that stuff back online. But the scope for the United States to produce, at a level like Kazakhstan or the Athabasca, it's geologically probably, if you were honest about it, it's probably not there.
Let's touch a little bit on your project, Crownpoint-Churchrock. Can you give us an overview of this project and what is the current status and what are the plans?
Sure. Yeah, Churchrock. So this again feeds into that history that we talked about. So Churchrock was discovered late in that 70s boom by a division of General Electric, United Nuclear, that, at that point in time, decided, well, we're in the business, we're selling power plants, we better have some uranium for our customers. So they basically discovered Churchrock, drilled out quite a bit of it. Now, that project we have now is what they had, plus some other contiguous pieces. Basically, it aggregates in total 50 million pounds. That is the project that we're now doing our first ever economic study on, which is, should be out in the market here in the next quarter. Basically, to put it into the marketplace and say, this is what it is. This is how it stacks up against all the other peer group ISRs and what have you. But that was a thing that was found in '79, ultimately consolidated under a company called URI, Uranium Resources, Inc. They went and got it permitted, got an NRC license back in 2010. It was quite a thing that was litigated by all the environmental groups in the United States. It needs one final permit, and it really gets a re-permitting because the state of New Mexico lowered the threshold, restorations threshold for water quality in 2015, I believe. And so we basically are now going about redoing that permit that the project, if you will, had before. And we're actually doing that. We actually got a bit of support. So we're actually doing that in conjunction now with DOE, the U.S. Department of Energy, which has given us a grant. And we're actually doing the test work at Los Alamos National Laboratory, which is obviously a storied place that people have heard about. Obviously, the movie this summer didn't hurt, and that's, by the way, that's a fantastic movie for anybody who hasn't seen the movie. Highly recommend it. Yeah, so that's really the last thing. And so we've got this permitting exercise we got to go through, which will take the project to where it could effectively be shovel ready. And it's basically a typical ISR project with a series of well fields feeding into a central plant. We have this NRC license. Actually, we already have the right to build a plant in a particular location with 3 million pound capacity. And the plan will come together as the financing plan and that sort of thing will come together as we get closer to when we can actually deliver on the project. But that's a project that really is going to now start to be in people's data sets, if you will. The problem is for us is that it was never in the data set of the analyst community and that kind of thing, mainly because of how it came about, because it was owned by Americans, and America is a particularly tough place to have a mining project. It used to be for oil and gas projects too, actually, especially like shale things, because they won't give you credit for reserves. And so Canada and the Australians basically have been the leaders in sort of how to define projects with their 43-101 regimes and their JORC regime in Australia. And so we don't have the equivalent of that, because when we bought the project, we were the royalty holder in this project. We actually there was a crazy royalty over top of this thing, owned by General Electric. And so we bought the royalty from General Electric in the last cycle. And then in 2016, we went to URI and said, we just sell the project, because they weren't moving it forward. And so we were able to buy the project and collapse the royalty. And
Mark, in ideal circumstances, when can you expect to produce the first pound of uranium from this project?
Well, I think you're probably looking at three years kind of thing from now. It would be probably the earliest, realistically. Yeah, given how long the timeline is on the permits, because the nature of what we have to do with the test work is, restoration is a slow process, and we're basically replicating restoration in the lab, if you will. Just demonstrate to the regulators that you can do it in the field.
You're in the process of getting PEA on this project, right?
Yes.
Okay. Let's move to the next one, and that is Jara Mesa uranium project. I don't know, did I pronounce it right?
Yeah, it's called Jara Mesa. Yeah,
Sorry.
Yeah, we have two smaller projects. They're both hard rock projects. This is a good hard rock project. We used to be owned by a company called Homestake Mining. Again, a big storied American. You know about gold.
Yeah,
it was the mother of gold companies, really, before Newmont or Barrick, and they were in the uranium business in a big way in the '70s. So they had mills and mines, and so they had a couple of things that were never produced, but were interesting because they were found late. Again, things found late in the cycle, and we were able to acquire one of them. And it's a hard rock project, literally in a mesa. But the access is from the valley floor at 5,200 elevation, and the ore bodies at about 7,000 feet elevation. And so it'll be a nice dry mine up in the mesa with, trucks hauling ore downhill. In the old days, it would basically be a plant. If they got to the bottom of that ramp, there would be, within sight of 5 or 10 miles, there would be 5 plants, but all those plants were torn down. So the challenge in the United States is they used to have a lot of hard rock processing capacity when the last cycle ended, and the last of those things was probably torn down in the 90s, and they've all been torn down, kind of remediated. So in order to reboot hard rock uranium mining in the United States, you're really going to, in a meaningful way, you're probably going to need another, at least one serious hard rock mill built in New Mexico. Now, there's obviously the one mill that Mark Chalmers and EFR has, right, in Utah, and we have a project actually that's ideal for that. But that's the limitation. So what we're doing there is we started permitting in the last cycle. We didn't quite get finished, so we're rebooting the permitting there on, quite a slow burn, because it'll be, what we want to do is just get that project again where it's permitted and could be built if necessary. I believe that project is probably, certainly at current prices, I think it's probably too challenging to haul it to White Mesa. But who knows? We get $120 uranium, and someone gives you a contract. Who knows? Yeah. But also EFR has interesting projects that really are the natural fit with this project. They have this Roca Honda underground project in New Mexico. Yeah. So if there's a concerted effort to kind of, let's have a little hard rock complex, though this project in Roca Honda and a new mill is really what you want to do. And who knows with where we get on security of supply. The American government, when they decided they wanted to boot up the EV business, they've certainly not been shy about throwing money at it. So if they get serious about keeping the lights on because they really run into a problem, there's the government, the government and opposition complex sort of could, go from being a headwind to being a big tailwind, and that things could happen a lot more quickly there. But it's certainly an interesting project, it's good grade, et cetera, et cetera. It's nice, 10 million pounds. It's got scope for, because it's underground, it's only been partially drilled. It's got scope to be bigger.
Yeah. Mark, what numbers are we talking here? How much pound of uranium potentially could you produce from your U.S. operations in, let's say, 5 years?
Well, I think the goal on Churchrock was certainly to start at 1 million. All these ISRs really inevitably start at 1 million because they're all an aggregation of well fields. There isn't just one big well field. It's a series of well fields typically. And so the idea is that you start the first one, get that running, and subsequently start up other well fields. I think there's a scope there ultimately, certainly to do 2 million pounds. Whether we get to the full capacity of 3 or not, we'll see. And again, a lot depends on price, because you start to bring in all of the resource when you get prices up quite a bit higher. Yeah. We have the benefit of a great starter ore body, or part of the ore body, if you will. But there's some lower grade portions that obviously would be more interesting and would come into play with higher prices. And once you built the capital, because the capital in an ISR is mostly the the final process plant, and then a whole series of, and people call it sustaining capex, but it's basically, you're doing it every year, so yeah, you're not sustaining very far without really doing it every year. So it's really more of an operating cost, but it's a well field business. You're just constantly drilling well fields.
How much of that material would come from LaSalle?
LaSalle is a small but very nice, relatively high grade. The grade's about 0.3%. The big thing it has going for it is Homestake. Basically, they literally were about to send it to the mill when the whole business basically fell over. So there's a adit literally to the face of the ore body. So a lot of that capex is done. It's very simple thing to put it back into production. It would have a very small surface disturbance area. It's essentially permitted. It's got a bulk sample permit, but that would morph into a regular permit. It's 55 miles or something like that from the LaSalle, from the Blanding Mill in Utah. And so it's a very nice thing. It's one of these things that when there is a production plan of some consequence coming out of the Blanding Mill that involves probably some EFR material, some of the material that CUR now has that Kimberly was EFR, maybe some other things around there.
Mhm.
You really need to probably have a sustainable idea of if you're going to start that mill up for uranium. And I know they have aspirations, big aspirations in the RE business now, which they're kind of focused on. But they will be, you know, at a high enough incentive price, they'll want to make uranium there. But I think they're going to want to start it and run it at. They're going to want to run it continuously. They're not going to want to run it batch on off kind of thing like they have done sometimes in the past. And I think this is where that project, I can't tell you how it's going to fit into that matrix, but that's where it'll be. And we're ready to go. That's the thing we don't need to, you know, that won't take, just call it, invite us to the meeting. We'll figure out how our thing fits in, you know.
I know it's
and that's where that fits. We don't talk about it much. We haven't even bothered to do a 43-101 on it because it's not worth it. It's, you know, roughly 3 billion pounds kind of thing. But it'll support, you know, support 400,000 or 500,000 pounds a year for 5 years, something like that. I mean, it's a nice starter thing. It's good conversation starter for the utilities, that sort of thing. So it has strategic value, which is one of the reasons, because people ask us, you know, why don't you peel off some of these other assets?
Okay, let's move to your Australian assets. Your company announced in mid-July exploration campaign for both projects. First one is the Westmoreland uranium project. What is the status of this project, plans, budget, etc.? Tell us more.
Sure, happy to do that. So we're in the midst of drilling right now. We're drilling with one rig, I think only on one shift. You know, the project's remote like every project in Australia.
Sorry, how many meters do you drill?
We're probably going to drill, I think, a minimum of 4,000. We'll see how well it goes with productivity and all that kind of thing. Okay. We're hitting a series of targets, and I believe we're on track for what we were expecting, and everything's going very well. I mean, we've really built up the team there this year so we can execute on this kind of a program. In Australia, typically for projects, you know, in the Northern Territory and Northern Queensland, you really do have a distinct exploration season because there's a wet season, dry season, and it's opposite to here. So it's winter there now. So we're basically good to go on the weather and any chance of a huge rainfall impact event, probably until about late November. Mm-hmm. And so the goal here is just to drill as much as we can till late November. Now, we haven't started to get results back yet, but obviously those are going to inform what we do next. This program is a mix of kind of wildcat targets to see if we can find another open pit effectively to put it with the existing project scope.
I love wildcats. I know a few companies that had a massive hits on wildcat drilling. So
yeah. Well, except the difference for us is a wildcat drill hole for us is 100 meters max. So. Yeah. Because we're looking for, we're our nature of our project there, it's an open pit project, at about 0.08 to 0.1, but which is nice grade for those things. It's equivalent to probably 2 to 3 grams of gold. So those are kind of the economics, right? So that's what we're looking for. I mean, we're not looking for deep stuff. So you get a bit that, and that's one thing your viewers really need to know. They get a bit mesmerized by this whole obsession with grade. Thanks, particularly with the people in Saskatchewan, because they're all with high grade and everything else.
Yeah.
But, BHP produces 10 million pounds a year from 70 ppm byproduct streams, and so the uranium comes from a lot of different places, and that's probably going to be the continuance going forward because. There are possibilities. I mean, if you take up the uranium price high enough, you're going to bring in things like, phosphate streams that have uranium in it that have produced historically. So there is other ways. So we kind of, and by the way, the market probably needs a mix of these things. Like Kazakhstan, the grade is, I don't know, 0.06 or 0.08 or something like that of these ISRs, which is very good quality.
Yeah.
That's 40% of all the production in the world.
Yeah, I agree. It's not always about the grade. Yeah, I agree totally. You have to look at a few factors here.
But I think the issue for newbie investors is if they come from kind of, I was an investor in gold stocks, more grade is always better in gold.
Yeah.
Bigger and higher grade is always better. It's in uranium, you have to just dig a little deeper. That's all I'm saying.
Yeah, definitely.
So back to what we're drilling. So we've got a series of targets. We got one that absolutely is I would call it a wildcat target. We knew it was kind of there from something that the previous operators had done, I think back in the 60s or 70s. We got a couple of sniffs last year with a very limited program. We're back drilling there to see how that develops. We've got another target that's a big flat-lying structure that we know will add some pounds. And then we have one target that we literally stopped drilling in 2012 because the market was kind of over, and we also had an opportunity to go permit the asset because the politics became favorable. And so we just stopped exploring in 2012, and we haven't been back. So we sort of realized where we kind of left off. And so there's a continuation of that we're quite excited about. Then this target called Warabagoo. It also has some gold in it. Like, it had some big gold numbers in it, up to an ounce of gold over like 4 meters. So yeah, we're kind of excited to go in there and drill that. And then if we get more time, like, we've got a series of other targets there. The thing about the project, Lucien, is we acquired an asset that really had 45 to 50 million pounds. Like, we added to it a little bit with our work in the 03 to 09 period. But effectively, it was more about upgrading the quality of it, getting it to JORC, doing an economic study on it, getting ready to do the permitting, and really wasn't about making it any bigger. It was big enough.
Yeah.
But, if we could find, 70 million pounds is better than 50. And I think one of the reasons we're doing it is I think, we're thinking people need to take notice of what we have there, because we sort of, as you alluded to earlier, I think we're kind of a little bit below the radar screen in terms of talking about what we have or where it fits in or the scope of how big it is. I mean, we have 50 million pound projects in 2 different places, both of which are considered geopolitically advantageous. And, it's sort of time for us to, get moving, get talking about it a little bit more, get the projects ready to go as well. So
definitely. Do you have a budget for this project?
Yeah, the budget for that's probably
budget?
Well, it's probably less than $2 million Australian. Because as I said, we get when we drill 4,000 meters, we're not drilling to the center of the earth. We're drilling 100-meter holes. So we can get a lot of holes done. Well, the good thing about when you have those kind of targets is you kill targets quickly, which is kind of what you want to do in exploration. I mean, the sooner you can find out where it's not, the sooner you can figure out where it is.
And when can investors expect drilling results? I know that you can't say exact date, but approximate time frame on drilling results.
Well, we're hoping to see some stuff back out of the lab in the next, I don't know, 2 to 4 weeks. It's the turnaround times are much better this year. Our whole logistical thing is much better. I don't know if Australia's gotten a lot better. Last year in particular, the labs were crazy. Australia's really had a boom, as you know, particularly with lithium and everything else. So, and there's a limited lab capacity. And so it was taking an inordinate amount of time to get turnaround on things. I think that it's better now, so we're hopeful. And we're also not a company, because we're not, at this point, we have big development stage assets. We're not super promotional. We're not going to put out, CPS counts from one odd stray hole here or there. We're just not going to do that.
Yeah, I know. Okay, let's move to Murphy Uranium Project. Same question. What is the status, plans, and budget for this one?
The budget for that's probably around $500,000. This is the program where we've done a lot of work there. So we originally had a JV with Rio. We're going to have to spend a lot of money to earn 50. We went back to them. And
do you know the exact amount?
Pardon me?
Do you know the exact amount you have to spend it?
Well, this was the original. The original deal was a JV with Rio. Then we went back to them and said, or they really came to us and said, why don't you guys take this on? Because it's challenging, and we're not really that excited about uranium at the moment, or whatever. And they had their own issues with Aboriginal issues, as you probably know, with what happened with the cave paintings and that and the other thing. So anyway, we did a deal with them where we bought them out at really quite a good price, and they have a back end, but it's got a huge threshold that we have to find $1 billion deposit for them to have an opportunity to back in.
Yeah,
and what we'd done prior to doing that is we had done all the geophysics. So we'd done all the remote stuff virtually. We then, in the last couple of seasons, went in and started doing the
radiometric
first kind of ground truthing thing, which happened last year. This year is detailed workup drill target season, which we know will have drill targets. and next field season is going to be the intense first phase of drilling and what have you. All these places, there's a sensitivity around access. You're working with traditional owners, etc. The process in the Northern Territory, we have found, is a little more protracted and challenging than the one in Queensland. So it just takes you a little longer to get where you need to go in terms of doing what you want to do on the ground. And so we're being obviously uber cautious about how we approach that.
Yeah.
But we're excited because we know we're going to have targets. From what I understand, the technical stuff coming back with the guys are accepting, the geos are excited about it. Yeah, we're going to have some good targets there.
Can you tell me more about 2 new exploration lease applications you have?
Oh yeah, the new leases. Yes.
Yeah.
Well, we've just decided, since we're back full on there, and obviously we're in a uranium bull market now, where there could theoretically be competition for things.
Yeah.
Is we really wanted to secure our land position every which way we could in both the territory and in Queensland. So we've submitted a couple of applications in Queensland. We've gotten the necessary approvals from the traditional owners and what have you to submit those, and those should come through in the ordinary course. We have also done in Queensland what's called a MDL application, mineral development license, and that just takes your core group of claims to a higher state of title. The only thing beyond that is a mining lease, but you can't apply for that until you're basically ready to produce. Mm-hmm. And in Queensland, because the current government, the Labor government there, is one of the 2 Labor governments in Australia that doesn't like uranium, at least at the moment. And so we're kind of waiting for them to either have a change of view, or in more probability have a change of government. So they'll be there for 9 years at the next election, and their popularity is currently at numbers that you don't come back from, but we'll see. It's the election's a year out.
Yeah, that was a part of my next question. So you see in a long-term change of policy there?
Well, yes, and just to make a fine point on that, and this is important, there is no policy. The policy is the policy of one party. It's actually really in one person's head. The current premier of the state of Queensland, if she said tomorrow, you know what, I'm getting with the future, I can't believe we're the only G20 country that doesn't embrace nuclear. Our party's out of step with those things. I'm not doing very well in the polls. Maybe I'll try something different. And she said that thing from before about where we don't like uranium, we're going to do something else. That's possible. And nothing has to happen. There's no legislature, no nothing. So the thing to remember, because some of these countries, you have barriers where you have to get 2 chambers of the government to change a policy, and there's a law. There is no law, no nothing. So in our current tenure of owning these assets, we had a window in 2012, unfortunately post-Fukushima, when people weren't too excited about uranium, that the government changed and the other party came in, and it was bring us your application. And so on the assumption that party will get in again, because I don't think Labor's permanent government of Queensland, then the next day we're on it, running hard to permit. And what we're trying to do as well is we're trying to actually get out ahead of that and understand what things we can do ahead of that, on the assumption that we need to move quickly. But I do think Australia is trending in generally. This whole anti-uranium thing in Australia it's sort of an anachronism, and it developed within one party for a bunch of set of reasons. It's kind of like one of those things that they don't even know why they have it anymore, but it seems like it appeals to some of their voter base. But they're doing their own polls, and they're saying that it doesn't even poll that well. So it is possible that at some point it goes. The other thing that is worth noting for people, because most people wouldn't have any idea what's going on in Australia politically and all the rest of it, but there's been a couple of important developments there in the last year, and even more importantly, sooner than that. The first was that the Americans agreed to sell nuclear submarines under this deal called AUKUS, which is, that's the first time the Americans have given anybody the technology and allowed people to have the technology. Now, for them to really embrace this technology, clearly they're going to have to develop a nuclear skill set within the country and everything else. So this is, you can imagine, this was done under the previous government, which was the Liberals, but the incoming government, which is, and frankly, the leader of the National Party is a fervent anti-nuclear guy from way back. But they've had to embrace this because they've done this deal. They need it. And that has really caused a groundswell of discussion in Australia about all things nuclear, to the point where in the last 6 months, the other party is now basically putting nuclear power, or really the consideration of nuclear power, on the agenda nationally in Australia. So that's when you talked about policy earlier, that is a thing that is a policy. So there is actually a policy, I think that's an Australian national, they would have to change it, that says we won't do nuclear power.
Got it. Mark, my next question that caught my eye is that you released the news where your U.S. subsidiary New Fuels Incorporated has been awarded by U.S. Department of Energy a grant in the amount of 1.7, a little bit more, million US dollars for the funding of a joint research project with the Los Alamos National Laboratory. To develop advanced in situ recovery groundwater restoration technology. Please tell me more about that.
Yeah, so I think we talked about that a little bit briefly. That alludes to that permit that we need in New Mexico. So what they're doing, though, and the reason that they're interested in it, at a national level, at a scientific level, is there's an awful lot of, these aquifers that contain uranium are obviously natural. And there's an awful lot of those that wouldn't be of a high enough quality that you'd ever consider, trying to develop an ISR project on them, for example. But it also means they're essentially kind of a condemned aquifer, and you can't use it for agricultural drinking water or other kinds of drinking water. So this thing where we're testing new forms of restoration or enhanced ways to probably accelerate restoration in these aquifers is of interest to, obviously, the government. In particular, it's of interest to these, in particular the Navajo, because the Navajo, a lot of the historical uranium mining in the U.S., some of it was done there, and unfortunately done with not the standards that we have today in terms of safety and environmental protocols and what have you. So yeah, I think it's important, and I think it'll be an interesting thing to watch.
Definitely. Mark, can you tell me what is the long-term view for your company? Is it to remain focused on both of your projects you have at the moment, or is there a possibility to sell one, let's say Australian project, and develop US assets? What's the plan?
We always looked at the strength of the portfolio approach, and I think what our company, whether it's our company as a standalone company or the company that we own, the assets that we own, being part of a bigger company that has the same general viewpoint, we want to be a company that has a diversified portfolio of projects, at various stages of development. But in a perfect world, you're going to want to have a uranium company that is a competitor, to the Camecos and Kazatomprom proms, and also attractive to the utilities, because the utilities actually want another, more substantial entity that's ideally not a single asset entity, where they can comfortably go and contract out on projects that are out, say, 5 years or 10 years. And so when you have a portfolio approach, even if you don't have the mine in production today that's going to satisfy a contract out in year number 8, you have comfort that company's in the uranium business, and when the time comes, they will produce from that. And that's the benefit that Cameco has. Obviously, they're long established. That company doesn't exist today. So I think there will be, in this cycle, I do believe there will be some effort to create that company. And I know you've had John Borshoff on before, and certainly Paladin.
Yeah.
That was really the Paladin vision of what John was trying to do there. And I think there is a big appetite in the market, particularly on the utility side, for that sort of company to exist. And you've seen part of the reasons why is these utilities do want to support new entrants, but it's challenging for them because they, imagine the hoops they have to go through to basically convince their higher ups that this project it's fantastic. I know it's in this, country that you're not going to go on vacation on, but trust me, it's great. They're in the lowest part of the cost curve. And then there's a hiccup. And then, so now they got a hole in their 2027 contract book.
Yeah.
That's what they don't want. They want to go to, but they don't want one company that they're negotiating with.
Yeah.
And so that's the window. That's the window of opportunity to create the right company. And we think we have the assets to do that if the cards fall right, particularly with the politics, because obviously we're ready to go, but we can't only do what the politics allow us to do. And the
Yeah.
price is out of the way now. The price is not a barrier to doing anything in this business. If you're in this business today at $60 going higher, and you don't have a project that you're honestly getting ready to produce as fast as you can, then you're not a really serious company.
Good point. But do you see more interest for uranium projects? I mean, were you approached by some company that were evaluating your projects, that had interest to buy some of your projects? And to flip a coin, and to the other part, are you searching for another projects to acquire? What is your M&A strategy at the moment for your company?
Well, we obviously take all the meetings and phone calls and what have you along those lines that you would expect.
Yeah.
You know, those things happen all the time. There are some interesting opportunities. We've had all of it, ranging from bigger opportunities to would you peel this out?
Mm-hmm.
I'm not a big fan of creating any more newbie companies, baby companies, because they just compete with the mothership to some extent, and you kind of got to, you kind of got to wonder about the business strategy of that, honestly, unless it's just to make a lot of money for the people that had the seed stock in these things. And in terms of new things, we're always looking for new things, but having been around like as long as we have with the different cycles and things like that, there's not a lot of new stuff, and there's not a lot of new areas. Like if you gave us $50 million and say, go explore wherever you want, there aren't a lot of places that you would go that tick all those boxes, particularly the geopolitical boxes, where you really align the geological potential with the other right set of circumstances that you can actually do something that has some kind of history with uranium. Because if you go to a new country, mm-hmm. and even if the ticks the geopolitical box, but they don't have any history with regulation of nuclear, that's a longer road than people might think. So yeah, it's tough. I mean, and I don't think you've covered the space. You have all sorts of guests on. Like, you're not hearing about a lot of interesting new exploration things really realistically outside of maybe the Athabasca. There's a fair bit of interesting things going on up in Alligator Rivers, and there's always a big possibility one day you find something interesting there. But it's not unexplored either. And so, there's nothing that's sort of a eureka moment that says we got to go there. But we'll see. I'm always open to new ideas. Who knows?
Never say
some
never.
Countries that were anti are flipping, or like Sweden was kind of a no-go place, and suddenly it's interesting again, for example.
Yeah.
And they have some deposits there that these are known though. But I'm talking greenfield. I really do think we probably going to need another greenfield effort at scale in this cycle. What part of the world that comes from, I don't know, because it's like oil. It doesn't, we mostly don't really care about where the oil in the world comes from as long as the price is low. And that's kind of how the utilities look at it. So if suddenly there's a lot of production from Central Asia, there's a lot of production from some new country, and it has the effect of suppressing the overall price, the real buyers for what we do, and that's, you got to keep an eye on that, that's your audience, really, not the stock market. And they are quite happy about that. But I don't see a lot of threat right at the moment on that score. And the people that are the biggest sources of demand, the Chinese and the Russians, for example, they've looked hard in their own countries. Yeah, believe me.
Yeah. Mark, tell me, please, what is the current cash position of your company?
I think it's on the order of $3 or $4 million at the moment, something like that.
And for how long do you think you are covered with that amount? I mean, until the next.
I think we're waiting. Obviously, we've got some big deliverables coming into the marketplace. The PEA, and then obviously we're drilling away in Australia. So I think on the back of probably some news flow and what have you, we'll probably look to raise some more capital in one manner or another. And certainly we're not short of opportunities to do that. And we've turned down lots of money at lower prices and that sort of thing. We were careful. One of the reasons we haven't been as visible and as active is we really didn't need to finance. We did all our own financing to acquire Churchrock, and it was done on, in retrospect at quite low prices, but we had a lot of warrants. All the warrant money came in. So we've really been living off financings that were done 2019, 2020. With the burn rate in the company is really quite low because the US thing now going forward for a while is mostly permitting, which is time, not money.
Yeah.
The expiration season in Australia will be over in 2 months, 3 months. And so we don't have a super high burn rate because of that. We're not one of these companies that had an asset in care and maintenance, because that can tend to be quite expensive. The property holding costs are very low, et cetera, et cetera. So yeah, it's more opportunistic type capital. And again, as I said, if you gave me 50 million to explore, I wouldn't know what to do with it, to be honest.
Yeah. Mark, do you see more difficulties in raising money? I mean,
more difficulties?
I mean difficulties in raising money. I spoke with a lot of junior companies, and they are finding more difficult to raise money. Do you have the same problem?
We haven't, but that leads me to a point about the fact that we're in these ETFs, and uranium is kind of a unique thing that it has, more than one ETF. It's got multiple ETFs. They all have quite low thresholds for acceptance. That really helps because it creates liquidity, and there's a limited pool of names. Even if they made the criteria quite smaller, even that they would really realistically invest in. So that's been a big factor that isn't available in, say, junior golds or junior copper, or even some of the lithium companies. I noticed, like, there's some pretty good sized lithium companies that aren't in the 2 or 3 biggest lithium ETFs because they haven't gone down that far down the food chain.
Yeah.
So the natural liquidity that comes from that has been super helpful, even through the more challenging parts of this market. And I think that's a big thing for investors. I think if they feel like they can make a bet, and even if they're wrong, they can exit the bet. The problem you have in a lot of juniors is, you buy a private placement, it seems fantastic, it's very cheap, and then there's no bid for 6 months. And so it's a different kind of thing. So I think that has really helped. I think in terms of the investor base, I mean, we just hit 60 before this Cameco announcement. You could see the whole thing building already. So what we haven't had yet in this market, I think, is and you would know because you've got the audience, the generalist investor, the generalist institutional small cap person that says, what's going on in nuclear, something going on there. We haven't seen that yet, I don't believe.
Agreed. Yeah, definitely. Please, Mark, tell me more about skin in the game. That's the question I always love to hear from uranium CEOs. I know you have one. So tell us, how many shares do you own in your own company, and do you know the number for the management?
Do I know the number of?
Insider ownership of the company.
Oh, yes.
Skin in the game.
Yeah, no. So I said, I eat my own cooking, for better or worse. And I've been an owner. I've owned these shares from buying them in the market as opposed to options or anything else. I'm really not a big believer in RSUs and DSUs and all these fancy ways they've created to allow public company managers to basically have pseudo ownership without actually taking any financial risk. So I probably have the biggest percentage of any of these developers, probably close to 10%. I think I own 17 million shares thereabouts in Laramide out of 220. And so, but obviously I'm expecting that at the end of this cycle, there's going to be an interesting opportunity, obviously, at some point to monetize, or along with all the other shareholders, right? That's the goal of the whole exercise. But I'm a big believer in that. I'm a big believer in ownership. Our insider group as a whole has north of 10. Some of the other directors have millions of shares. So we're big believers in that.
Yeah. That's great to hear, definitely. Final question for you: on what other commodities are you bullish besides uranium?
Well, I'm very bullish on energy. I'm very bullish on oil and gas. Because it's got structural underinvestment for years. A bit of the same dynamic, although you can kind of fix the problem a little quicker in oil. But right now, with even at the current price of oil, I think it's really undervalued. I mean, you need 102 million barrels a day, and no one thinks about the supply of oil the way they think about the supply of uranium in terms of, it comes from A, B, C, and D countries in this amount, until it's too late. And but even now, the generalist thinking on Wall Street is not really about that. And I think at some point in time, they're going to start to look at that pretty hard and say, where are we going to get 102, 104, 106 million barrels a day from? And so to me, the price is frankly way too low. And the public has been unfortunately conditioned to think this is either a natural price or a high price here at 85. So I'm super bullish on it. I mean, I think energy in the S&P 500 is going to go back to, at the peak, I think it was 25%. I don't see it going there. I mean, in Canada, because we have a resources market, the percentages typically are higher, and we have a lot of oil and gas companies. But I mean, I could see it in the US going to 10%. I think we're at 4%. So I think you have a long runway there too on those kind of companies.
Yeah. Marc, I want to thank you for being my guest. It was a great chat, and I wish you luck with all your projects and, of course, in your private life as well. Thank you very much for being my guest.
Yeah, my pleasure, Lucian. I really enjoyed it. Thanks very much.
Thanks.
Have a good
Bye-bye.
day.